Lisa Calhoun, and I'm here to share with you some really interesting data that our team uncovered in Pitchbook. So I think it'll be primarily of interest to founders and frankly to other investors that, like Valor, invest in seed rounds. So I'm just going to jump right in and ask you, if you are going to invest your next dollar in startups, in which region of the country would you think that you would get the best potential return? Just, if you were going to drop a pin on it. I think that you might believe that it's the West Coast. I mean, there's certainly a lot going on out there, and there have been so many incredible companies founded and grown in the West. But what Valor was interested in is, where is the South? Our headquarters in Atlanta, Georgia, are in the heart of the fastest growing regional ecosystem, according to a lot of subjects, but also according to the US Census. So we thought what we would do is take a hard look at the numbers. And I'm going to share some of those numbers with you. But first, I want you to know a little bit more about our methodology. It's really quite simple. We pulled all of the data from the past 4 years from Pitchbook. We have an API level login, and we took a look at all the deals in all of the regions. The way we did that was we actually had to break it out by state, and then we had to reassemble each region of the United States from Pitchbook's state data. So what does that mean about some of the trends we're about to talk about? Well, it means that they're directionally probably quite accurate, but at a detailed granular level, not so much. Pitchbook data, no data is perfect. And so we don't feel that we have perfect results either, but we got some really interesting ones. The first result I want you to know about is that investor returns from the South are on par with the West. And we're going to take a look at some of those numbers together. That was the key and most surprising result. Over the last 4 years, it turns out that investors who invested in startups based in the South US, the South region, had performance returns on par with those investors who invested in startups on the West Coast and in the West region. Now, let me take a step back in case you don't know what I mean when I'm talking about regions. I should clarify. The US Census breaks the United States into 4 main regions. It's the Northeast, which is New York, New Jersey, that area, really where a lot of venture began. Then there's the South. The South is a large region. It stretches from Texas all the way up to DC, Maryland, that area. 40% of the US population lives in the South region. And over the last 10 years, it is the only region that's been growing double digits. Then there's the Midwest. The Midwest is centered around Chicago, and it's also really come on the radar in venture capital recently. So we'll take a look at how the Midwest as an emerging market is comparing to the South. That's something that our team was really curious about too. And then there's the West, and the West is also quite a large region. It includes Washington, Oregon, California, some of the biggest states in the country. So let me share some of this data with you by sharing my screen. I'm going to pull up a section of our research report that we created for Valor LPs and partners. And what you see here is what I was referring to, that the median exit value of startups over the last 4 years in this country, divided by the amount of venture capital invested, shows the West and the South performing essentially on par. Yes, I know in these numbers, the South actually looks like it's doing a little bit better. But to my point previously about granular data and perfect data being unavailable, I don't even feel comfortable saying that. I think the best thing to say is, wow, the startups in the South are doing really well when it comes to returning capital to venture partners. Another thing that this chart shows is that, of course, the distribution of returns in venture capital is not at all equal. And it's quite possible to not make multiples on your money in VC. These are the returns of the last 4 years, and they show the West at 1.23 and the South at 1.27. So we found this pretty fascinating. But then the next question we wanted to know is, well, there's certainly a lot larger volume of dollars being invested in the West, even if the results are just as good as the South. They certainly attract a lot more capital. Well, are there just more deals there? Is the South producing enough deals for significant venture capital investors to be interested? So in other words, we wanted to get down to the base production rate of the different regions of the country, with our focus being particularly our own long-term view as an Atlanta headquartered early stage investor. And so here's what we found, and I'll just go ahead and share that report back with you. The number of seed deals per region, and this data is from all of last year, we pulled it on the 15th of December, shows that the West indeed does have more startups in terms of volume of seed deals at over 3,000. But the number 2 region in the country for 2022 is the South. The South's deal productivity outpaces the Northeast and multiply outpaces the Midwest. And so this is a pretty fascinating and very telling statistic that is a bit fresh. The fact is, the South has not long been known for startup deal production. But as you're probably aware, there have been a lot of demographic trends and hybrid work and companies building their secondary headquarters or their technical headquarters in the South in the last few years. And that has made a huge difference in the number of founders we have creating backable startups in this region. This bar chart, just to be very clear with you, is VC-backed seed deals last year. These are not startups who have an idea and hope to raise money someday, or maybe raised 100K from an angel. These are startups that had their seed round in the last year. And so the South is really pulling ahead. And what's interesting is, since the South's population is so large, with 40% of the US population homed in the South, where are we going from here? The fact is, we could go much further, which is one of the exciting findings from this research. But then we wanted to take a look at the number of seed deals per person. Seed dollars per person. In other words, if you're a founder, and I hope if you're a founder listening to this, you don't choose to move to the Northeast, but you might. It's a legit takeaway. There is more money per capita at seed in the Northeast than even in the West. Isn't that fascinating? I find that to be a little contrarian to popular opinion. So what's very interesting here is that the South, which was number 2 on deal production and on par or better on actual returns over the last 4 years, is actually dead last in capital availability at seed. So let me give you a little more clarity. First, we're going to go into the numbers in the bar chart, and then I'm going to tell you how we got to those numbers so that you can run some of your own or let me know some of the questions that this brings to mind. So let's start with the West. If you're living in the West region of the US with so many seed and angel and accelerator funds there, and that's how we did this. We took all of the dollars available for all of the organizations that are intent on that first financing. So we summed up dollars from accelerators We summed up dollars from seed stage VCs who lead at seed. We summed up angel group dollars that were visible through Pitchbook and created a kind of a summary of how much money is available at seed, the first round. And then we slashed that, put that over in the numerator against the population so that we could learn how many dollars per capita as a measure of the capital availability in a region. And so, I mean, the West is good, right? At $30.35 per person at this point. And then the Northeast, the Northeast takes it away at $40. But these two mature markets are pretty close to each other when you get to real effectiveness. I would say the Northeast and the West are our mature venture markets. And then I would bucket the South and the Midwest in emerging venture markets. And so the Midwest is also, has a long way to go in seed capital availability relative to the population. It's certainly not nearly on par with capital availability in the mature markets. But the South has less than half of what's available in the Midwest per capita. So what this means for our ecosystem, which has the second most production of seed deals and has incredible returns, is that we need more. We need more seed capital. And that's something, of course, that Valor is very excited about being one of the leading providers of. So our final deep dive was taking a look at what could be done next. And so we believe that it's really important for quality, sophisticated, long-term investors to take a hard look with us at data like this. Run your own numbers. Use your own thoughts about what constitutes capital availability. For example, with Pitchbook, we took a strong look at dry powder of $1 million or more. And if a firm, an accelerator, an angel group was not responding or hadn't put any information in, we weren't able to sum up the money that it might have had available. However, if a fund, a firm, an accelerator, an angel group had, less than $1 million of dry powder left, we did not sum it into these numbers because a lot of times Pitchbook is 2-3 quarters behind. And if that's where it was when we pulled the numbers on December 15th, it actually would probably be much less than that. So this is a snapshot, a point in time. But I think it really shakes up what a lot of people believe about what's real in seed stage across the country. So it turns out, if you're looking at seed deal productivity, the West is still on top, but the South is a fast rising number 2 and has a larger population base to grow from. The West Coast is a region that overall is losing talent. The South is a region that overall is attracting talent. Plus, of course, growing our own. Like the West Coast, we have many strong tech universities like Georgia Tech and healthcare universities like Meharry Medical College or Emory, and business universities like Morehouse and UGA, and so many more, the Vanderbilts, the Georgetowns. These are all located in the South and producing tens of thousands of high quality people looking for an exciting job in tech. The next thing to think about that we feel that these numbers really tee up is that capital is not distributed as talent is. And so there's a huge arbitrage and opportunity in the distribution of capital versus talent. Now at Valor, we do one thing. We lead seed rounds in B2B SaaS founders anchored in this amazing region, the US South. So if these numbers interested you, if you're looking to put capital to work in a market that's really making a name for itself and producing exceptional financial results, Well, let's talk about it. We'll really love to hear from you, your thoughts on our research. Please feel free to download the report. It is free to qualified investors. And if you're a founder, these were the highlights. I hope they help guide you into making some of the right decisions as you're looking for capital partners. It turns out that some of the best exits aren't just in the West Coast.